The ATR indicator can be used to find massive breakouts like right here. But most traders haven't learned how to use it correctly. So in this video, you will learn all the most important things you need to learn about the ATR indicator. You will learn how to use it to trade breakouts, but many other things as well, like how do I use the ATR to set my profit target and stop loss. And I will even show you some special settings you can use to potentially improve the indicator even further. But right, so let's begin here by answering the critical question: what is the ATR indicator? Well, ATR stands for average true range. And this right here is an indicator, a very famous one, created by J. Wells Wilder, and it's used to measure volatility. Volatility is a very important concept, and if you want to learn more about it, I do have a video about that, so I will make sure to link that video up in the corner in the eye. But in simple terms, volatility basically measures how much an asset, like a stock or cryptocurrency, moves around its moving average. So as you can see, it shows how much an asset typically moves or range over a set period. And when it comes to the ATR, it works across stocks, forex, crypto, and if you trade gold or anything else, it basically works across all markets. But right, so now then, how does the ATR work? If you really want to use ATR effectively, it's, in my opinion, important to understand at least a little bit of how the ATR works. It's not super important to learn the math, but just to have a basic understanding. So the ATR uses something called true range, and this is a bit complicated because this is basically the largest of either the high minus low or absolute value of high minus previous close or absolute value of low minus previous close. In my opinion, understanding exactly what this means is not super important, but what is important is that the ATR works by measuring something called a true range of the candle, and then it takes a moving average of this true range. This is how we get the ATR, and the standard setting is to use 14 period. But as I mentioned, later on in this video, I will show you guys some special settings that can potentially improve your ATR even more. And on trading platforms like TradingView, if you have been following our channel for a while, you know that I really like TradingView. The ATR is often just shown as a simple line below the price charts. But right, so now then, why should we use the ATR? Well, as I mentioned, the ATR is in its core an indicator that measures volatility, or in other words, how wild or how calm the market is. And we can use the ATR for many different things, like, for example, spot breakout opportunities. We will take a look at an ATR breakout trading strategy later on. But as I also mentioned in the intro, you can use the ATR to set smarter both stop losses and also profit targets. And there are many other use cases as well, like, filter trades based on volatility conditions. So you might, for example, only trade in certain environments where the ATR is at a certain range, because perhaps your trading strategy works in, high volatility environments, but not low volatility, and so on and so on. And the ATR simply gives us a realistic expectation for how much an asset might move in the near term. All right, so next I do want to talk about some common ATR settings and how you can potentially improve them. But I do think I will save this for later on in this video when we are in TradingView, because that's much easier. So now let's actually jump here to the next slide and take a look at some of the most popular and best ATR based trading strategies. So the first one I want to talk about is the breakout strategy, and this one can be very useful. This one is usually, either waiting for a low ATR period or waiting for the ATR to break a key level. So you can use things like, for example, entering when price moves beyond a specific multiple of the ATR, such as 1.5 or 2x. And if this sounds complicated, don't worry, I will show you guys step by step very soon. And this can be great for spotting, for example, new trends. The next trading strategy I do want to talk about is using ATR to set stop loss and take profit. This is a pretty similar trading strategy where you use multiples of ATR to get your stop loss and profit target levels. You can also use a trailing stop loss with ATR, which is basically when the stop loss is sort of following your trade. And you can use 1x or 2x ATR as realistic targets, but it will depend a little bit on what time frame and so on you're using. And now guys, I do have, as you can see, I do have some more strategies as well. But in this video, we don't have time to go through them all. So I think I will save the rest of the strategies for our YouTube community and our YouTube channel members. If you didn't know, we do have an amazing community right here on YouTube where I share extra material such as full presentations like this one right here. I also share exclusive videos, personal notes and much more good stuff. So if you want to get this full presentation and at the same time support the channel, please consider joining the community by clicking join down below. But all right, so now let's actually jump into TradingView, because now I want to show you guys the ATR trading strategy step by step. And first of all, right now we're looking at Bitcoin on the daily time frame. But this, as I talked about earlier, you can use the ATR on pretty much all time frames and pretty much all assets. So if you trade stocks or Forex, don't worry, you can do that as well. And here on this particular example, this is a very great example in my opinion, because you can see here that Bitcoin saw a very significant resistance here. You can see we got rejected multiple times, and then eventually we saw this massive breakout. But the question now is, how could we have used the ATR indicator to actually spot this breakout and also help us to find our profit target and stop loss levels? Well, to understand this, we first, of course, need to open up the ATR indicator. So to do this, we go up here to the indicators tab, and then you can simply search for ATR, and it should come up right here. You can see TradingView has a built-in average true range indicator, and we also have tons of different slight variations of the ATR created by the community. But for this video, I do think I will stick here with the normal average true range. So let's open this one up. And also, by the way, guys, if you for some reason haven't gotten started with TradingView yet, I do have a special TradingView link that you can use to get TradingView Premium for 30 days for free. And you will also get a $15 bonus if you eventually want to upgrade. I do think the ATR indicator is available for the free version, but I'm pretty sure some of these indicators are not available on all TradingView versions. So if you want to get the full experience with TradingView Premium, you can definitely consider using that link. But now, first of all, I just want to change some settings real quick for the ATR. So I go to the settings tab, and I just want to make the line a bit thicker here so you can clearly see. But first of all, when it comes to breakouts, what I'm looking out for is something called momentum candles. And one way to identify momentum candles, in my opinion, is that the candle should be at least 2 times or even 3 times as large as the previous candles. But when I say this is a pretty arbitrary thing, because you might question, how many of the previous candles should we actually look at? And this is where the ATR indicator comes in, because instead of looking at the previous candles, you can choose, for example, that in order for us to see a real breakout, we need the price to trade twice or 2 times as much as the ATR. So what do I mean here? So if we take a look at the candle that broke the very important resistance we talked about earlier, what you can do here is that you can come down, you can hover your mouse over the ATR, and you can see that the average true range for this candle, or in other words, the period of 14 candle that it uses to calculate, was around 2,576. So in order to have 2 times the ATR, we need the candle to be, you know, a more than $5,000. And let's actually take a look at how much was this candle. Well, we hover over the candle, and you can see up in the middle that this candle was around 6,000 US dollar. The range of the candle was around 6,000 US dollar. I can show this with this price range tool. You can see from there to there, around 6,000 US dollar, meaning that we have more than twice the ATR, and this right here can help us confirm the breakout. But of course, guys, you don't want to only rely on the ATR. On this chart right here, we're actually already using market structure. This key level right here is a clear example of important market structure. And if you want to learn more about market structure, I do have a full course about that, and I will make sure to link that course somewhere up in the corner in the eye. You also want to use price action. Price action and market structure is basically the foundation of, at least in my opinion, pretty much all technical analysis. So I do have a full price action trading course as well, and I will make sure to link it up in the corner in the eye. I highly recommend to check out both of these courses eventually, but you know, do take your own time. You don't have to go through them right away. But now you know that you can use a multiple of the ATR to find these key breakouts, but how can we use it for our stop loss and profit target? Well, let's use our long position. Let's say that we identified this breakout, we used the ATR, maybe we used another indicator like volume as well. Now you might wonder, how can we use the ATR to set our stop loss? Well, we can once again use a multiple of the ATR. Many times when it comes to stop losses, you might not want to use 2x, you might want to use something more like 1.5, but you can also use a 2x. So a stop loss of 2x would be around 5,000, so around here. So this could have been a stop loss, and using a 2-to-1 risk to reward ratio, your risk to reward would have looked something like this. All right, so now let's switch the attention a bit here and take a look at how we can change the settings of the ATR to potentially improve it even further. Because so far in the video, everything we have done here with the breakout trading strategy has actually been with the standard average true range settings. But now let's actually go down and change the settings here. And to do this, we go down here to where it says ATR, and you press on the cogwheel right here. Then you want to head to the inputs tab. And as you can see here, the standard setting for the ATR is 14 for the length, and the smoothing is the RMA. What does this mean? Well, the length is how many periods, or in other words, how many candles the ATR uses for its calculation. And the RMA here is the special moving average that is commonly used for the ATR. And the standard ATR settings is, in my opinion, pretty solid for most situations. However, there are a few markets and situations where we can consider changing the settings. For example, if you are a day trader or even a scalper, so you might trade on the 5-minute, 15-minute, or even 1-minute time frame, then you might actually want to decrease the length of the ATR. Some of the recommended settings here is either 10. This will actually already give you quite a few, the signals will already be much faster, but some traders change it all the way down to 7. So 7 will give you very fast signals. But yet another thing you can actually do This is a bit more uncommon, but you can change from the RMA to an EMA. An EMA is an exponential moving average, so it gives much more weight to the previous movements. And you can see that by changing here to EMA, take a close look at the ATR indicator, you can see that it changes a lot. From RMA to EMA, you can see that the EMA goes up and down much more quickly, and that is because it gives more weight to recent price movements. So 7 EMA is an extremely, it gives extremely fast signals, but at the same time, it might give, more false signals as well. So do be a bit careful if you go with this setting. However, if you are more on the swing trading or investing side, you might want to consider much more conservative settings. So let's change back here to RMA, and let's actually, instead of going back to 14, let's change it up all the way to 20. You can see that when we change it to 20, you will get a much smoother ATR. And this can actually be useful, as I said, if you are a much longer term trader and are looking for perhaps catching whole trends, or at least larger movements. You can even go very extreme and change to a setting of, like, for example, 50, and you will get a super smooth ATR. But yeah, guys, as I said earlier, this is just scratching the surface when it comes to the ATR. It's a very powerful indicator, and we can dive a lot deeper. But this video is getting a bit too long here. I'm sorry if it got a little bit rambling. But yeah, guys, if you want to dive even deeper into the ATR, I will make sure to put this presentation out for our YouTube channel members. I would love to see you all over in the community. But for now, take care. And now, guys, in order to use the ATR effectively, I highly recommend it to dive deeper into market structure. So when you have the time, make sure to check out this video next.